Hello, this is Amy from iTradeAIMS.net. I've decided to do some quick analysis of members' charts. This is going to be an unlisted video. So the first one that came to mind is 7th of October. Jasmine is taking a trade on the Swizzy. The time frame is hourly. Okay, that's a good trade, profit-wise. Right, what did she take? Well, that's one of the beautiful setup. It is, even though the chart itself was pretty rubbish, if I may say so, because of this stuff that's happening here. But within that, even within that, the market seems to have formed a structure of a wave 3 down, even though this 3 itself was smaller than this. But we can ignore that bit because we had this strong triple rejection here. Price went down, pulled back up, went down, did not break these levels, so it's still in range bound. Rejects that area again, goes up, but then bounces against the previous levels. So if you can see, all these boxes are related. And then it forms a sleeping gator with purple correct and turns into a beautiful setup. So 2R, that's very good. This is like seeing the light or the shimmer of light in the darkest pit. So you are stuck in a dark jungle or a tunnel, and you see that little light somewhere, and you take it, and it takes you out. So look at this. The market stayed within a range. Even though the range was pretty big, it still formed the 3-4-5 setup one pattern, and that's why it was successful. I'm going to go and look at to see if I can find the Swizzy. So let's go back, and this is where it was. This is where it was. See this trade in all this rubbish, but she saw the setup here, and this is what makes it interesting, because the box is tight. There's a 3, there's a 4, and a 5 continues. It's just beautiful every time. I think I took that as well. So that's your wave 1. That's your 2. And as you can see, zigzag up. That's the 1, 2, 3, or the A, B, C. The A, the B, and the C. And then the 3 comes down, and this is some kind of a 5 of this 3. So this is look at that 3, and this is 4. It's got all the elements of the pattern. So within 4 you see A, B, C. You see the PC pattern here as well. See that PC pattern? This is a PC pattern. So a PC pattern happens within corrective waves. In this case it's in wave 2, in this case it's in wave 4, and then the 5 down. This is a very tiny kind of 5 for this 3, and then this itself becomes the 4, or maybe this whole thing was 4, A, B, C. You know, you can never really spot exactly what it was, looking at the price and stuff. But if you cover that bit, ignore that, and just focus on the wave, all it shows is a 3, a 4, and a 5. And you can see it here, that you have these higher peaks price wise. So they are in height, they are less than one before. So these are the divergences, and because it's before the cross of zero line, so these must be the, you know, 5th waves of the 3rd wave. Obviously in this case it wasn't a divergence, but in this case it was kind of tinier divergence. And then that same pattern repeats itself, and you see the divergence or the divergence here. And this divergence means that this is wave 5, and the fact that it hit target zone 1. So divergence and target zone 1 confirms wave 5. Right, I've gone too deep into this one. Let's go to the next one. Pardon my unpreparedness. I just came home and thought, just going to talk about charts, which I love doing. Okay, so this one's a rent. Let's talk about this one. Aha! Oh yeah, I can see what's happened here. So yeah, this is the one I want to talk about. So you see, on this occasion, you see a 3, where you have a strong 3 up, and then you have the peak of 3. So within the 3, this green histogram from here to here represents the wave 3 up. And inside that, we have a divergence. So this then shows that if this is diverged, then this is the 3 of 3. And this then, because it's divergent, is the 5 of 3. So this entire sequence up is a 3, and inside we have 1, 2, 3, 4, 5. You can visually see it. Now I'm going to go to my chart. And using my Control-Shift-Tab, I'm going back. There we go, Euro USD. Why did it not work? See, there was an issue. Trades like these, I don't like to take. And Jasmine, if you're listening, Russia, if you're listening, Jasmine, if you're listening, and I hope you are. Well, of course, if you're watching, you must be listening as well. I'm going to post it in your journal. So, right, so we were talking about this. Let me bring that. Now, I'm going to put this box where I think... So, I pointed earlier that the wave 3 was... This green histogram is representing wave 3. Of course, when wave 3 happens and it peaks, that's when we can, that is when we are then sure that the start of this wave 3 almost always is on the other side of the 0 line. So this is where it started. And the trick here is that when it started, you didn't know, and you could not have known that this is the start of the next wave 3. And that's the most interesting thing. So now we know that for the wave up, this was the start of 3, right? This bit. But if when you were here, it didn't look like it was a start of 3. It looked like some new wave is starting, going downwards. And you probably were looking for short signals around here on the day after. But then when it started going up, oh, look at this lovely, lovely cherry here, right at Frankfurt Open. If you took this cherry on the 10th of the 10th, bang, you have 18 up there. I mean, beautiful. Just trail the candles and you will have around 4.2% if it was a 1% risk. Anyway, let's go back. So we have this 3, and then the next day, it doesn't cross the 0 line, and it does the 5. So let's just count those candles. So these are 68 candles. And to get the accurate count, I need 120 candles. Between 100 to 140. And that I can do by splitting this chart. So I'll go to M30. And as I go to M30, that box that I have drawn will then have inside it the desired number of candles. That's 133 now. And we are not counting candles per se, we are actually counting the bars of AO. And the rule is that if you have 100 to 140 candles, inside it you would see a completed wave. I wasted, I can't say wasted, but I was in this thought process for years that I would count waves between 100 and 140, and then after that I would trade. And it was only until like a couple of years ago that I realized, no, if you want to trade wave 5, and it makes perfect sense to me now. I don't know why. I hope it does to you as well. If a completed wave can be shown on AO with a minimum of 100 and maximum of 140, then that's a great thing to know. But what good is it to me for trading? Because if the wave's completed, then the wave's completed. Now, I would use that rule for my fruit method now, to say I'm not going to take a fruit unless the last 100 to 140 candles have this pattern of 3, 4, 5 completed. You get this point? I'm very glad that I actually started this video, because these videos kind of help me think, especially when I'm writing a script or just doing it like this. So as you can see here, on the M30 we have to put the candles and the price action in perspective, in the correct perspective, because this is the science of chaos, right? Time frames are linear geometry, so we need to change them, and we have to, within the resources that we have, we can actually count those waves, and those waves don't always happen. It's a bit like this. It's like a big sea of Lego. None of the pieces are connected to the other pieces. And then all of a sudden, some of the pieces start to connect and they start to form shapes. And as they start to form shape, you think, this is that particular pattern, the 3, 4, 5, that I actually can take advantage of. So you can predict it. So what I was doing is that I would go and I would look and I would count, and then the 3, 4, 5 would be complete. And that's not of use to me. So then it occurred to me that, yes, I need to research what is the required number of candles for the 3 and 4, so I can trade the 5. Do you get my point? You get my drift? And then I found out, okay, so when we did a lot of research on it, a lot of statistics, you know, these stat guys take a lot of money, £2,000-3,000, them, they go through all the data and everything, and then we found out that all of these waves, when you go through 10,000 of those setups, and then you do a statistical analysis on it, you'll find out that the 3 and 4 can have this rule of a minimum, well, they suggested minimum of 50, but I'm going with 40. And it wasn't even 50. It was, strangely, the number very near to fib number, but forget that. So it will be either 34 or either 55, so we go for 40. Say, minimum of 40 candles and maximum of 96. So let's call it 90 or 100, not a problem. Now, what does that mean? That means that for this completed pattern, I want to see the 3 and a 4. And when that happens, in most cases, it's going to be within that limit. Now, did I get it wrong a little bit? It's a bit off. Yes, it is. Because in this occasion, if this is the start, well, actually, this is the low point of the 4. That's where it came. So it's still within the rules, yeah, 90. Or if I count it from here, then it's 98. If I go here arbitrarily, then it's 108. So, you know, it's not an exact science. And that means that the 3 and 4 is within the range, so I would be looking for a wave 5. So if I entered here, I probably got out here, and this turns out to be the 1-2 of the wave now. Now let me just zoom in. So if you were with that thought process, you saw the H1 chart, like so, and you were on this day and you're thinking, okay, I'm going to go for wave 5. We have two options. One is to just take the break of this box, and you know where target zone 1 is. Just take that. Now target zone 1, the stop loss requirement is 25, but target zone 1 is 31. So you have two options now again. You either do not trade it in T20 stage 1, you will leave this alone. But if you were at stage 3, you knew what to do, risk management and everything, then what I can do, I understand euro dollar. I'll take the trade here and I'll have my 15 to 20 pip stop loss. And then I would put my target point there. And as soon as my trade's entered, my stop loss is going to be below the candle. If I took 20 pip stop loss, then it would already be there. And then when this candle closes, my stop loss would have been here. And then I won't touch it and let it hit the target point, which it happened easily. Now all this has happened. All this has now happened. And then you come to the next day. What are you thinking now? Right? So I explained all that, and I enjoyed explaining it, and I hope it helps you understand the structure. Was to basically explain this. So if I said, oh, this is blah, 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 then you won't understand what I'm trying to say. But you have to tell the story behind this. Now, is it a bad trade that she took? No. Yes, you could take it. If you follow this, the flowchart rules, then probably this would be, okay, wait for the new box. And by the time the new box was there, box was, even if it were big or not, your stop loss would be, your pending order is going to be up there. Your stop loss would be here or here. It wouldn't have triggered. But could I have avoided this setup? Now, using the logic that I just explained, let's do that analysis now, right? So now I'm seeing this as 3 and this as 4. See, previously I was doing that inside it on the M30, but now I'm doing it on the hourly chart. So on the hourly, I see that these peaks, the 3 and the 4 and the 3 and the 5 are 3 up. So if this is a 3, and this is where the other rule that we found in 2017 after that analysis, we found two rules. One was the counting of the bars, and the other one was the counting of it's related to the counting of the bars actually. And convert this into days and hours, and you find out, basically, I shouldn't even say that. If you just apply the counting of the bar principle, then it doesn't matter what time frame you are, you're going to find that particular setup one that we like to take. And so now let me count, and if this is the lowest point and this is the minimum requirement of wave 4, if this is the bottom of wave 4, then I'm ready to trade. Now let me count the candles. The candles are 85. So I'm okay by this. Like this is within within the particular count. But now what I have to see, and this is a bit interesting, is to see what is the ratio of the candles that took to create wave 3 and the candles, or the number of candles that it took to create wave 4. And this is where it becomes interesting. It's visual for me. I actually translated that visual sense of the charts into numerical terms, and this is what it comes up with. So now, what is my ratio of candles? So you don't have to do this analysis per se like this, because we want to simplify things. But I have to explain it so that then it becomes easier. So I can now see that about 65 of these candles were used. So out of so we have 84 candles in total. out of the 84, 65, what we would need in this situation is a slightly longer wave 4. So now it's easier. You don't have to do all the math. You just do the visual. So on the hourly, I came up with a rule to say, if you have a wave 3 that took 1 to 3 days to form, then you need at least a day and a half wave 4. So basically, you should have taken your rent on this day, not this day. See what I mean? So if you took your rent on this day, it would have saved you 1 rent, because you have the A, B, and the C going on, right? So here you got B trapped, right? Hope it makes sense. Okay, let me bring my drawing tool. So after the 3, you have the 4 has to happen, right? Isn't it? And so the 4 is happening. This is your A wave, 1, 2, 3, 4, 5 impulse. And then you have the corrective B, and that creates the B trap. We got B trapped. So the closer the setup is to the peak of wave 3, the more chances of getting B trapped. And then we find out that this was actually the A of the B. So basically the B happened this way. So now it's becoming complex, wave 4. And so if I do this analysis, and I can do this in like 10-15 seconds in my head. If you do it many, many times, then you know. So this goes up, goes down, go up. So this is now the real B trap. So this is a double B trap, because this wasn't then the B trap, but at that time it looked like one, so you'd accept it as a B trap. But then when this happened, and this was actually the A trap, and then this was the B trap, and then this became the C. The C is always impulsive, it's against the trend, and it's a spike. And as you can see, it was followed by this strong impulse. And C waves, ironically, I don't know why, but they are associated with news. So in a bullish trend, let's say in stocks and stuff, the PC or the wave Cs would be formed by bad news most of the time. And in this occasion, we saw a gradual drop, but a sudden move up. So now, because the chart is too big, the reason I was talking about this is the formation that was happening. As you can see, the whole chart was in its own formation. So now we can actually check the entire chart. I'll bring this. So first, let's recap. We talked about this wave, which is the 3 up, and inside it we saw the 3 and the 4 and the 5, which was tradable. And then we tried to trade the wave 5 of this sequence, but repeating my rule, the 3-day wave 3 would usually require 1 to 2 days wave 4, and in this case we have probably even 2.5 days. Zoom out, and as you can see, we have a 3 and a 4 and this 5, and now the 5 has actually turned into a 3. So that means that we are probably dealing with a 1 and a 2, and the 1 and 2, whenever something is a 1 and 2, it will be impulse. So the 1 would be impulse, and inside the 1 you will have those impulse waves, the 3 and the 5. And then within 2, there is a lot of craziness. 2 wave. So if you're in a sequence on your current time frame, let's say hourly, and that sequence happens to be a wave 2 of the daily time frame, you would have that hourly chart really jagged or like spiky, up and down. So this is that, and then it forms a new sequence. So now what are we dealing with? We are dealing with, as it goes past the target zone 1 and target zone 2, it turns into a new wave 3, and the sequence goes up. So if you go to the daily chart now we can see what's going on. And this is the mother chart of all the trades. So you look at the daily chart. Years ago, I used to be tunnel visioned. The knowledge about the market was limited, obviously, about the charts and all these patterns. I used to focus on 1 or 2 time frames, and it takes really a lot of experience to actually be able to manipulate this and go to higher time frames. So now, if I'm doing intraday trading, my perspective will always be connected to the daily chart. A few years ago, this would be an impossibility for me. I would think, no, the daily chart has too much information. I don't need that. I'm only trading the hourly. All I have to do is today's price action. And today's price action means 1 candle. But that was not true, because on the hourly chart, you're dealing with at least 5 days of price action. So that means at least 5 candles on the daily chart. And that is what gave birth to the waltz mechanism as well. So this is what it is. It was a slow kind of talk. I don't know if people have time to listen to all this, but I only analyzed 2 charts. Let's do another one. Who cares? If you don't watch it, I don't care. I'm learning something. So then again, is this a beautiful setup one? I don't think so. Why? Where is the flat wave for? So I could have just looked at this chart at the beginning of the video and say, nah, not a good setup. And you'd be like, what do you mean? Look, the dot is there, Gator sleeping, purple correct. Why is it not a good setup? Well, where is my tight box? I have to go back to the chart again. Because this is, a lot of people do this time and again. And sometimes it works, so when it keeps working, you think it's okay. I want tight boxes. This is a pullback straight down. I would rather have an apple signal here to take. See, I want tight box. So if I go to the 4-hour chart, actually, if I go to another chart where I can find the desired wave. Oh yeah, so okay, there are problems with this chart. This is not the ideal one because the wave 3 here has been created by a new spike followed by 2, 3 more. So this is always tricky on day later. But look at this. This is a 2-day wave 3. First day was like not that strong, but the second day everything happened, which was followed by about same amount of sideways market, but it's not an impulse pulling back up. And around this time it was actually pulling up, so this was the wave going up, but it became a setup one here because, and this is the trick, a horizontal box. Horizontal box. Tight range. This is what we mean by tight range. So if you took a trade here, even if the box is tight, it's not a horizontal range. It's stepping up. Although it didn't work the way we would like it to work, because, you know, it went kind of a bit stupid there. But it was really, really, really well tradable yesterday when I wasn't around. Because you have the formation already, 3 and a 4, and then you have this breakout, and then this pulling back up, whereas in which you have within the Asian session prices going sideways, and then at the London Open this closes just outside the box. This would be a perfect trade. Perfect trade. Talked about in my last video as well. Going back to the journal. I think this is enough about that chart. Right, so okay, so she has taken both of the trades. So she took it here, and then she took it again on the next day. and it has turned into the, these were my lines of thoughts, giving it another go since I got stopped out yesterday. Wow. Okay, I understand. This is what we would call a disciplined but unintelligent trading. No disrespect meant. It's that frame of mind where, and yeah, this is a really interesting point. I was thinking about it the other day, and I went through this, still go through it sometimes, is that trading is not strictly scientific, like well, it is scientific, but trading is not strictly following a set recipe kind of thing. It's not that, it's not objective, it's the art of trading. Because if you can objectify it like that, we would just code it and give it to, you know, robots would do it. There's that art bit in it, and that comes into play in this, like analyzing your chart and making that decision. So there's this point where in stage 1 and 2, I tell people to just see the setup, trade the setup, see the setup, trade the setup. And that is because when you see the setup, trade the setup, and after 400 or 500 trades, you would develop a certain feel, you know, that intuition about the market. And intuition and feel is not something esoteric or something hidden. It's basically the knowledge, the experience that you have gained, and now your brain can process that information far more in a superior way. Now, I would say there was absolutely nothing wrong with taking this trade because it was a setup one. This is where the problem was. And if you took both of the trades, that's a DS1. Well, can't give DS1 for this one because the box was big and the wave was down. This is definitely a DS1. If it didn't work out, let me see how. Oh, yes. It just immediately turned around. And that is to do with a little bit of preparation about news and stuff. So on the 14th, on the 15th, things were happening on the Brexit end. I hope I'm not wrong. Let me just have a quick look back at the calendar. Yeah. Stuff was happening. The Bank of England Governor Carney was about to speak in the morning, and then later on something was happening with some Brexit stuff, and then positive news came out and all that stuff. So those things will take things, you know, they get out of the positions before the news, and then when the news are in favor and all that stuff. Anyway, that's not the point. The point is this a setup one here? Of course it is. You took a trade, it rented, that's fine. 33% of the trades are going to be like that. No problem at all. Then did you take it here? Box was big. Yes, but was it tradable? It was absolutely tradable. Why? Because the intent is there now. And this candle, this strong price action, strong intent from the market telling you something really clearly. And where does it stop? Around these levels. Next day price comes to it, reacts, comes back, but where does it get stopped? These levels. And then it goes up. I'm going long here. I am definitely going long here. And if not there, yesterday, if I was watching, I discussed it in my yesterday's video as well. Perfect. A triple whammy. Or whammy. A triple whammy. Yeah, this was really good. PC cherry. Imagine if I did this every day. I'll be doing it all day long. Right, so let's look at it again. This is very interesting now. Okay. So this is the type of trade, and on the same day, okay, so pound did not turn around straight away. Now here, look at this. This is a great example. Same price action. Pound was the hot pair. So this is also a consideration that you have to do on the hourly chart. So economic news events are happening. You know pound is hot. And why do you know it's hot? About this. This is happening. This is a bit too early. Same situation like we discussed in the euro dollar. But like I said, I would take an apple. And this is the apple. And you would add on there. And with the apple and add-on, you don't want to mess with stop loss anymore, because your stop loss will have to be where you will be proven wrong. So it will pull back, goes up, probably another add-on here, and you have a beautiful trade that way. And if you entered here like Jasmine did, then obviously it hit target point up there. So you had a loss on euro dollar, but you have a winner on this, so you're still 1% up. That is the trick. Pretty good, pretty good, pretty good. Looked like OK S1. It spiked just before LO. I took it at LO. The entry was okay, a bit late, but didn't want to take it before LO session. Okay. What else is happening in Jasmine's world? Time frame, hourly, the US 500. Oh yeah, this was my signal. So yeah. Yeah, we discussed it in another video. This is a lovely setup one. This is the setup one that we should be taking. This type. See, 3, 4, then a nice lovely tight box. Goes into a 5. Beautiful. I think I'll end it here. This is what we want. On any time frame, this symmetry of the setup is important. People go and take trades like the Swizzy trade that was taken, the one that we discussed, the first one. If you don't take those trades, you'd be better off, because those are inside noise. Market kind of organizes itself within noise. But what I want to do is to have a pattern happening on the higher time frame, which is already not the noise, but an organized pattern going on. So I want the 345 within the 345. And I'm going to do a video in response to one of the very good comments by Gopal, I think, on YouTube. And the person was asking, and it's a very good question, why people don't ask it. And actually people just do it. Everyone is after wave 3 because it makes sense. I know the members here, I've spoken about it in the chat room, maybe they remember. We're all about wave 3. Everyone is chasing the 3 and they lose. This is my pitch for selling my membership, is everyone's been chasing the elusive wave 3 and they lose their accounts. But I found a better way. You know, we don't chase wave 3. We are the wave 5 people. Yes.